Their Navy's gone, their Air Force is gone, their anti-aircraft is all gone, it's all gone. Their radar is all gone. Their leaders are all gone. The next set of leaders are all gone. And the next set of leaders are mostly gone. And now nobody wants to leader over there anymore. We're having a hard time. We want to talk to them, and there's nobody to talk to. We have nobody to talk to. And you know what? We like it that way.
Oil prices heading higher as the U.S. pushes to open up the Strait of Hormuz, and the White House eyes emergency action to lower gas prices. Welcome to the Big Money Show. I'm Taylor Riggs, along with my co-hosts Marcus Lemonis, Brian Brenberg, Jackie DeAngelis, and with us for the hour, Fox Business's Lauren Simonetti. Great to have you.
Good to see you guys.
So Israel agrees to not strike Iran's gas fields after President Trump said stop attacking critical energy infrastructure. Meanwhile, Iran, though, keeping up strikes on the Gulf states, hitting Kuwait's largest oil refinery. To keep costs under control, the Trump administration is planning releases from the Strategic Petroleum Reserve over the next few months, and the White House unsanctioning Iran's oil.
Most of that oil will be absorbed in the next 30 to 45 days. So yeah, what we have is an interruption of flows outside of the Persian Gulf. We've got over 100 million barrels in crude tankers that's on its way or floating, waiting to unload in China. That oil is already going to be sold. It's going to show up in China. So this is a way to let those barrels flow into, India or Vietnam or Indonesia, somewhere else where those barrels will get refined and supply the products needed in Asia.
All right, if we're doing unsanctioning Iran's oil, Jackie, you know I'm coming to you first on this. So help me to make sense, because some people say, okay, we're using Iran's oil against them, basically taking out the leverage. I tend to look at this and be like, wait a minute, we're unsanctioning the people that we're fighting, and then they're going to get the revenue from the oil that we're unsanctioning. How does this make sense? Help me to understand.
Well, the oil is already out at sea, so it's out there. They're going to get some revenue for it. Yes, you unsanction it, and they're going to get potentially a little bit more revenue as a result of it. But that's a drop in the bucket right now. When you think back to the Biden administration, the Obama administration, the billions of dollars in revenue that they gave them, and the situation they created around oil where the enemies could buy that oil, not enforcing sanctions, and they essentially funded all of this chaos that's happening right now. So I don't think the administration is that worried about unsanctioning this oil, and it could help the flow in the short term. But, we've been talking about duration, and duration is the crucial aspect of this, whether it comes to the Strait or oil prices in general. The latest reporting shows that the military operations are going so well. The Israelis and the Americans have started in sort of setting up what is the next phase of this operation, which I think is really, really positive. Benjamin Hall reporting on Fox that they're going after on the ground the police and the militia, the ones that are killing the people that executed the athlete just this week. And so they're sort of trying to set the stage for the people, because they think the timing is right now on the military operations side for the people to be able to rise up and throw this regime overboard. When President Trump says to Israel, stop hitting the critical oil infrastructure, I think that's very important. Again, he's not doing this to give the regime an advantage in any way, but he does want something to be left there in the country. Remember, there's been a lot of destruction right now. He wants them to be able to have an opportunity to not have to struggle to rebuild so quickly, and oil will be the new regime and the people's source of revenue. So, I just am floored by the whole operation, the strategic aspect of it, how they've executed it so flawlessly. I've always said since this started, you could have that black swan day where something happens that you haven't expected, but we really haven't had that. And seeing them go into that ground phase of trying to set the stage for the people to have their moment, to me is incredibly inspiring and uplifting.
Lauren, yesterday I announced that I am Wednesday's child full of woe, and I see more woe out there today. I'm looking at a 2-year yield that's above 3.9, the highest since July, a 10-year yield near 4.4, the highest in 8 months. And the scariest thing is, because that 2-year yield is closing in on 3.9, there's a 50% chance of traders pricing in a rate hike. Not even a pause, not a cut, but a hike. So the bond market the rate at which we've gotten here, 12 basis points on the day, makes me nervous that underneath the surface, is there sort of an inflationary thing and then a slower growth issue on the horizon? That's why you have equities down lower. How do you sort of read all of this?
And when would that hike come? The market is saying October. What happens in November?
I know.
So we've got some big issues.
Wait, so Warsh is going to hike, Warsh Fed's going to hike rates?
Well,
that's what we think?
I don't think.
Should there be a confirmation?
There are 12 votes, Brian. Warsh doesn't have the sole vote.
Okay.
We have gas right now at $3.91 a gallon, which means we're knocking on the door of $4 a gallon. It could happen next week. It could not happen. The administration is doing everything they can, working with every party imaginable to make sure that we contain the price of oil. Newt Gingrich was just talking to Stuart Varney, and he said, look, oil's going back to $60 to $70 a barrel around summer, around June. But June's still a ways off. You're shaking your head.
Way.
But that's the hope. They need to do whatever. Otherwise, we're paying $4 a gallon, and that is politically unpopular.
It's politically unpopular.
There's also talk
Marcus,
of
too.
recession right now.
Yeah.
That I'm hearing here and there, and the odds of this. So yes, this is all very disheartening. But how long will this conflict last? And is the U.S. with our allies in Israel and in the Middle East setting the scene on the ground to finish the job and make it okay and safe for the people of Iran to take back their own country and have some sort of energy infrastructure in place with which they can do it? Everybody's focused on the Strait of Hormuz, but what about the Houthis? Analysts I speak to say they've been awfully quiet in all of this. If they attack any Saudi infrastructure that's going west through the Suez, we've got a huge problem on our hands. And we're not talking $150 a barrel oil. We're talking $200 a barrel.
And their boats
oil.
are starting
And I'm
to go.
sorry for scaring everybody, but
Yeah.
that's the case.
Well, it's not about
Marcus.
scaring people. It's about just having some level of realism here. The boats are already going around Africa today in preparation. And when you said that the administration is doing everything they can to contain the price, it's starting to feel a little like every word is being well chosen. Unsanctioning, releasing, doing things to give people the idea that gas is going to be under control. I don't think it's the fuel prices as much that are a concern. And where inflation is going is all of these things that are happening today are causing the barrel to be more expensive, the boat transport to be more expensive, the basket for the consumer to be more expensive, and ultimately the balance sheet for companies to be more expensive. So you have four Bs working against us. And if we start to see these inflationary moves of things getting delayed as they arrive and being more expensive as they move, that's where the inflation concern should start to come in. Having clarity around when the thing could end gives people at least some relief, but not today.
Brian, I have some potentially positive headlines for you. Chubb just comes out with this 10 minutes ago. They say insurance is available to ships transiting the Strait of Hormuz under certain conditions. We are providing war marine risk insurance for hull, liability, and cargo. The details, structure of this Gulf Maritime Insurance Facility with the DFC, which is what we've been talking about, that we are waiting on the administration to do. Not really moving the market. Again, I think we need more details. We actually need, like, the boat to go through.
Yeah. It's
but
a piece
again,
of the puzzle.
This is more.
Chubb's
give us
writing the
positivity.
insurance. It's got the U.S. backing. It's a piece of the puzzle. They're sending in the A-10 Warthogs. They're sending in the Apaches. You don't send those guys in until you've gotten to the next level of securing the strait, okay? What happens after Warthogs and Apaches? I think that's when you start talking about ships going. Like, that's not me. I don't know anything about military strategy, but if you talk to guys who do, these are the steps you take to get ships going through, okay? I know we got a lot of nervous Nellies on this set
No, that's
today,
why
okay?
I came to you. Calm us all down.
It's just me.
And no, you are, and I agree. Look, there's a lot to be nervous about.
Ships are supply, insurance is costs, and costs are what drive inflation.
Yep, and that's why the federal government said we're going to backstop this insurance that Chubb is writing, so Chubb can write it at prices that these shippers will buy it at, right? I don't know how that's going to work, but they're definitely on.
Reinsurance,
Okay,
it's fine.
The Houthis, I agree. Those guys caused a lot of troubles. I'm positive CENTCOM is aware of the Houthis and what they're doing, and they will act to intervene on whatever the Houthis are trying. The problem for the Houthis is their main money and power source is under a lot of duress right now, and nobody knows who's in charge, okay? So all the risks are there. You've got a couple things with President Trump. The biggest one is, unlike his predecessor, he wants fossil fuels to be abundant and cheap. He cares about that deeply. Yep. Joe Biden did not. In Ukraine, Russia, Joe Biden did not. He had politics. That's why he did the SPR. But fundamentally, he did not want that to happen. Donald Trump wants that to happen. And number two, he's got guys running this operation in Iran who know how to get things done, okay? And they're not backing down. Mm-hmm. When Secretary Hegseth stood up there yesterday and said, we need money to kill bad guys, people gave him a lot of blowback on that, right? Well, that was coarse to say that. I don't think a secretary should say that. I'm sorry, but he's actually telling you the truth.
Yeah.
They're bad guys, mm-hmm. and you have to kill a lot of them in order to make the world a safer place. They're going to do that. So all of the short-term stuff notwithstanding, you guys are right. I think the bigger picture here is you have competent people with an objective that makes sense for America and the globe, and I don't think they're going to give up on it.
Can I make a quick comment on oil? Yeah. We were around $55 a barrel as we entered the year, but also remember the weather's going to get nicer and we're going to go into the summer driving season, which is typically the peak for prices. So this is coming at that transition point. If, in fact, the duration ends up being short, it will come at the transition point where demand will typically it sends prices higher anyway. So where would oil prices be if this is over quickly by the summer? You're still going to see them relatively high. They won't be $97 a barrel, but they're not going to be the $55 a barrel that they were in January because seasonally you just won't see that. So 70, 75, people will start to see some relief, and then they'll see more relief as we're heading into the midterms as well, because in the fall prices usually drop too. Americans do have a short memory for the most part. So as long as prices are stabilized and significantly lower, I would say by September, I'm less worried about the midterm.
Yeah,
it's a big price to pay for a bigger problem, and I think solving the problem is worth it.
The summer blend gasoline can add 15 to 30 cents per gallon, but the administration is talking about not making the refinery switch over to the more expensive blend. So that's another tool in the toolbox to keep prices down.
Just end on a positive note, the chief investment officer at UBS Global Wealth Management says our recommendation to long-term investors is clear. Stay invested. History shows that attempts to market-time geopolitical events often result in failure. So this sort of speaks to my chart of the day yesterday, where trying to
that was a great
gain
chart,
it on emotion doesn't work. Long-term, if you stay invested, generally things end up panning out. We'll see how that goes. And there it is, my chart of the day from yesterday.
Best chart of the week.
Well, you know what it does? It really,
chart of the week.
For me anyway, it really put some clarity on it and put it in context, because historically speaking, I think these things do move in patterns, and you can glean a lot from a chart like that. So showing that we're sort of at that bottom point where things are ready to tip upwards, I think is very encouraging.
Maybe every Friday we'll decide which chart becomes, instead of chart of the day, the chart of the week. Let's do FedEx, my stock of the hour. They're killing it. They're crushing it. They're up 2%. They raised their full year profit guidance. Earnings now $19.30 to $20.10 per share for the fiscal year. Basically, they're undergoing a restructuring that is working, combining the express air freight and the ground delivery networks. And Marcus quickly jumped in saying the wartime in the Middle East isn't really impacting us. I mean, sure, it has like a macro effect, but like there isn't sort of a direct impact on us as a company.
I was happy to see you address FedEx, because as a business owner, leader, I have seen FedEx get far more aggressive in the last 60 days at beating up UPS, buying contracts out, trying to figure out how to stack things across multiple companies. They are they're raising their guidance as a function of them raising their game right now, taking out SG&A and delivering it to the companies to help them get these parcels moved.
Good stuff. Coming up, New York City Mayor Zohran Mamdani rolling out his hyped community safety office made up of 2 staffers and a $260 million budget, and plenty of questions. We've got the details next.